Oswal Studios in Mumbai.
Good morning, hello and welcome to a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Oswal Studios. I'm Prashant. With me, my colleague Sonia and Nigel, and it's a little bit red, right? Yeah. I mean, it's a little down and out today.
That's putting it very mildly. It's deep red across the board, right?
It's deep red, and things are looking. I mean, we've been talking about this, right? It was almost. I mean, looking at the price action this morning, I was saying to myself, well, this was in a way coming. I mean, last week, all through last week, data was strong. We were talking about how maybe good data is bad again, well, boom, markets down 2%, 2.5% last night. Let's just get the ball rolling very quickly in terms of what you need to kind of pay attention to. So stocks are down sharply. I mean, if you've not already noticed, 2% of the S&P, the Nasdaq down about 2.5% on your screens right now. Well, in conjunction with what the stocks did, which is down, yields rallied very sharply higher. The 10-year yield was up 10 basis points to almost 4% now. We're at about 3.95%. Yesterday, same time, I was talking about how maybe with the pullback we saw last Friday in the 10-year yield, perhaps, there will be a period of consolidation. But nope, you have, a day of holiday on Monday and markets come back and a 10 basis point addition to the 10-year. The 2-year also rose aggressively. So in terms of data, what I was talking about, right? The US services PMI number came out, which is showing that we are back in expansionary territory in the month of February. The number is now 50.5. The expectation was 47.3. And the previous data was 47. Actually, it's a big expansion as compared to what the expectation was. What this confirms is that, the recent string of strong data are not one-offs. It started with the jobs number. You had the CPI number. You had the producer price index number. You had the services PMI. By the way, the manufacturing number also came out along with the services number. It's still in contractionary zone, but that also beat expectations by quite a bit. So I think, data, I think, is what the market is worried about. Strong data is what the market is worried about. The fear is, the process of disinflation has kind of peaked. I mean, we're decelerating. The process is decelerating, and maybe there is a bit of an upward bias to the inflation numbers when we start to get them. And of course, what does that mean? It means that Fed perhaps will do more. That's a concern. The Fed will keep interest rates moving higher for longer. So it's become a bit of a moving target. Even 2 months back, people were convinced, markets were convinced that 5.2% is a terminal rate, nothing beyond that, and maybe in the second half of 2023 we will see rate cuts. Well, market implied terminal rate, which is where rates by the Fed will peak off, the Fed funds rate, that itself has moved up 40 basis points in February. That stands at about 5.4% or so now. There are calls, I mean, from mainstream economists saying that, eventually by the time this is done, we'll be closer to 6% than to 5%. We're closer to 5% now. So that's the worry, really, which I think markets have. On the other hand, while economic data is strong, results are weak, right? So earnings have slowed down quite a bit as well. And that kind of, in a way, foreshadows what perhaps is to come. If rates go up quite a bit, economy slows down, we'll have more of earnings problem. So Home Depot, which is a Dow sort of component, gave out a weaker forecast. That, of course, has implications for the entire retail and the discretionary space. That space in the US was down sharply. By the way, earnings season in the US is also going to finish. I think 80% of the companies have reported, and earnings are quite muted for the S&P 500 group of companies. Okay, in the midst of all of this, let's just come back to and look at what the Nifty and the Bank Nifty are looking like. Yesterday was absolutely flat, right? I mean, the Nifty and the Bank Nifty. We ended on the Nifty once again absolutely at the 20-day moving average, which is at 17,824. The close was 2 points away from that, right? So that is a pivot, like I said yesterday, on the way up, on the way down. Let's see if we get a firm close above or below. The start, of course, is lower by about 70, 80 points on the SGX. The low of 17,720 hopefully should not be broken in the ongoing correction. So that perhaps is a bit of a near-term level that you need to watch. Above and beyond the 20-day moving average. On the Bank Nifty, that index closed exactly at the 50% retracement of the up move from the 30th of January to the 16th of February high. That's at about 4,700. I mean, we closed at 4,673. Again, these are very near-term levels, but we'll see. And the next support, I'm not talking about the levels on the upside. There is the 40-day exponential, etc. It's well highlighted. We'll come back to that if so necessary. But since the open perhaps is lower, the next support for the Bank Nifty comes in at about 40,400, which is about 200 odd points away from where we left off yesterday. Sonia.
Absolutely. Today, I mean, all signs are pointing downwards, right? The SGX Nifty is weak. It's down about 90 odd points across the board, whether it's the US, whether it's the European markets, all under pressure. But our own markets have been in a very, very tight range. So 18,000 has been a hurdle for a while. And the activity has thinned down quite a bit. So flows have become very muted. Yesterday as well, FIs bought about 520 crores, while DIs sold about 230 crores. And, in the weak global handover, two things stand out. Of course, Prashant was also pointing out about the slowdown that we saw in terms of Home Depot, but even Walmart has said that their growth will be just 2 to 2.5% in the year to come. So Walmart has also scaled down their own earnings estimates, and that has resulted in a big fall that we've seen in the global market. So both Home Depot and Walmart indicating that consumption has slowed down in a big way. Of course, now the Fed will be releasing minutes later in the evening, and any indication of further tightening is going to be watched very closely. For the markets overall, there are growth fears, and that's indicative of what's happening with Brent crude as well. Brent crude is now below $83 a barrel. So there is risk aversion globally. The sentiment is definitely on the sour side. But let's see, 18,000 is a bit of a hurdle for the market on the upside. The start will be a dip. The dips may not get bought because the sentiment is quite weak, but let's see how it goes.
What about you guys overnight? Did you skip a heartbeat when you heard about NSE extending the interest rate derivatives? I was thinking, wow, we were going to be here till 5, but luckily it was only interest
rate. Not for the stock market.
Not yet for the stock market. So, that was the only good piece of news as the global markets did fall overnight. But
it's surprising how many people actually want it.
Yeah.
Of course, because it's our work to commentate on a daily basis, so it might get taxing. But for people who actively trade, they don't even when there are extended holidays or long weekends, they kind of miss it. So I think there is a market for extended trading hours, I'm sure.
I mean, it's a very polarizing subject, Sonia. It's a very polarizing subject. I mean, more than, between bulls and bears, that's a polarizing subject, but this is, I think, even more polarizing. And I would say more people actually weigh, at least that's my sense, because, I mean, we put out that story as well. I mean, what can you do in 8 hours that you can't do in 6 hours? I mean, that's the common kind of argument, but there are arguments both sides.
And many years ago, when I briefly worked with the exchange, the feedback at that point of time was in North India, it gets darker. So that extending hours, there was a lot of opposition. This is close to 10 years or so ago. That if you're going to extend hours, then people find it more difficult to get home, particularly in the winters. That's, December as well as January. But that
has also changed now, right? Because, I mean, now it's all on, the online brokers, Zerodha and the likes, they're about, I think, 60, 65, 70% of the market. So very few people are actually calling in the broker and saying, well, buy this or sell that. It's all on. I mean, technology has moved on, but the debate goes on.
So let's keep that debate.
But there's no debate on what we want, right? We don't want extended trading. We don't want extended trading hours. For sure, at least I don't.
All right, let's get back to the market action. Given the kind of cues that we have seen overnight, and the Dow, remember, it's reacting to 2 days of news. The Nifty in that duration is down close to around 100 points. Now, in 2023, most global markets are saying it's a great start. But for India itself, we have not really performed or not participated in this party. The Nifty is down close to around 1.5%. You have the Nasdaq that's still up close to around 10% after the correction that we're seeing. The Shanghai, the Taiwanese index are up between 7 to around 9%. So can India outperform in a jittery market scenario or a jittery global market scenario? Well, we'll get a bit of a hint of that in today's session is my guess. Institutional flows, remember, they have turned positive, and there is signs of some short covering from the FIs as well. We'll get to that in just a bit as well. Now, defending that 17,720 to 17,750, that's most crucial today. And the Nifty Bank yesterday, well, it could have easily fallen down given the kind of news flow we had towards the end of trading action. But the Nifty Bank ended more or less flattish. So can the Nifty Bank finally find some form? And that's going to be the deciding factor for me in today's trade. Let's get to a couple of data points then. The FIs, what do they do in the F&O market? Well, they covered close to around 10,000 short contracts odd. Most of that, I think, was the Nifty Bank where they were covering shorts out there. Yes, there was the rollovers of close to around 40% odd, but the open interest was down out there. So I'm guessing that the most of the short covering took place out there, though they continue to remain net short on the indices. On the index option side, we were talking about this. They were writing calls with gay abandon, very, very aggressive call writing. Yesterday, some of that call writing did get unwound because the FIs, they covered close to 1.5 lakh call contracts. So that as well told you that there was a bit of a short covering bounce that played out. What's a little bit encouraging for the bulls is that, the 17,800, 17,750 put, yesterday there were signs of writing. Remember, tomorrow we're getting into expiry, but there were signs of writing on both these two strikes. Close to 30 lakh shares were added out there. So just plugging in those numbers, going by that put writing, 17,720 to 17,750, very important we defend that, particularly in the first hour of trade. You want to watch whether or not we can defend that. And on the Nifty bank, well, you could easily see it pull back, 300-400 points odd, but you don't want it to break this 40,400 odd. And that's going to be the defining factor today. So the SGX Nifty is suggesting an 80-85 point pullback. If that 17,720 to 17,750 odd level can hold out, then the bulls will feel that they're still in the game. Otherwise, in fact, we could easily see a sharper slide. So that's straight setup from my perspective.
All right, Nigel, thanks for that. Well, 80 points lower on the SGX is what we have. Before we sort of move forward, let's quickly tell you what is lined up here in the first half hour of the show. We get you updates from markets across the globe. Matt Orton of Raymond James Investment will join us to discuss the global setup. Our research team, of course, gets you CNBC-TV18's list of top 10 stocks for the day. And around 8:30 this morning, we do a fundamental stock analysis with Devin Choksi of KR Choksi. So that's what's coming up over the first 30 minutes.